Well, good morning. This is the rate update with Dan Frio, where our goal here is to educate and inform you guys everything real estate, especially when it comes to the financing options. So let's start out the morning with the market summary. Yesterday, we had a nice little rally in the markets, but that day is over with, as well as the stock market, if you've been watching the stock market as well. So let's get over to market news. What I usually start my morning with is what the stock market's doing, because usually that has a different correlation from where mortgage rates are going. Because if the stock market's up, that means usually bonds, it's pulling money away from bonds, and the bond markets are going down, raising rates up. But if you're confused, let's get to it. So let's go over what I do every morning and why I do what I do. So I go in here and I see, okay, what's the stock market doing? Well, we're seeing all that moving in the wrong direction. I see gold changing, it's up. So then I go to mortgage rates. Where are mortgage rates right now? Well, let's go over where the mortgage rates started. Basically, this is where they ended yesterday. So mortgage rate sheets have not been posted yet today. So Mortgage News Daily couldn't do their job. What do? Well, they comprise mortgage rates from lenders all over the country to figure out where the average mortgage rate is. And here's their findings. So this isn't your rate. This isn't my rate. This is basically, let's use this as a guideline to see what direction mortgage rates are going. You see this little chart down here, you're seeing that, oh, it's been nothing but up, 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 and away. Okay, so that's where we are right there. So let's go across where mortgage rates are. Then I am going to go through the economic calendar and give you guys some insight on what's happening today, because today we have a special guest at 3 o'clock. His name is Jeb Smith. He's a fantastic YouTube influencer as well as YouTuber out in Southern California. So let's go across here. We got the 30-year fixed rate coming in up 1 basis point right here at 5.36, comes in with a cost of 0.4. How do you figure that cost? Easy. Let's change the word points to percentage sign, the percentage sign. So you take your loan amount. In this case, we're going to say it's $100,000. You multiply it. So you hit the times button, you hit 0.4, which that number shows down here, you hit the percent sign equal, and that's how much it would cost you to get this rate. Okay. But again, I'll say this is fictitious rates because rates go in increments of eighths. So what I mean by the rate would be 5, 5 and an eighth, 5 and a quarter, 5.375, 5.5, 5.625, and so forth. So I don't have to go all the way through that for you to explain it. So then we go over here to the 15-year. We're seeing that is up 1 basis points, coming in at 4.79. Also comes in with the same amount of points as the 30-year fixed. FHA/VA/USDA, we lump the government loans right through here in this area. We got them right at 5%. They've been stuck at 5% for the past couple weeks. I'm not complaining because they basically skyrocketed within the last 3 to 4 months. So we come in over here. We got the 30-year jumbo coming in at 4.75, up 1 basis point. The only thing bucking the trend is the 5/1 ARM. It is down 2 basis points at 4.5, but it does come in with a 0.5 point. Okay, here's the 10-year chart. You can see we're in uncharted territories. Sentiment for today is positive. That might change around noon, and I'll show you why. But where are the MBS markets right now? This is what's happening to the MBS. It's a mortgage-backed security. It's a bond that trades on Wall Street that is the biggest factor of your mortgage rate. Okay, so we meticulously watch this to see what the yield on this thing is doing. All right, so right through here, this shows us the price of the bond. This gives us what the differential is. So this means the price is up 0.13. Okay, so that means as the price goes up, it drives down yields. Now I try to do this once every month or so just to give you guys an idea how this works. So let me explain. As the price of the bond goes up, the yield comes down. Okay, so let me give you an example. Let's assume that I'm holding this MBS coupon in my hand, the bond. Next year, when it matures, I get $100 back. That's the face value of the coupon. Okay, so let's pay a high price for this thing. So let's go out on a limb and say we'll pay you $100 for the $100 bond. Okay, so I give you $100 today. Next week or next year, you give me my $100 back because that's a face value of that bond. What was my yield? I gave you 100, I got 100 back. My yield is 0. Okay, well, how does this work? As the price goes down, the yields go up. So let's explain this. So now let's say I pay you $50 today for that $100 coupon. So I give you $50. Next year, you give me $100 back. So what's my yield now? 100%. I doubled my money. So do you see how the lower prices drive up the yield? That's exactly how it works. Okay, so let's get back to it. So this is where we are. I'm saying we might be at a bottom, guys, at least for right now. Okay, economic calendar. This is what's scaring me. Not the new home sales right here that's coming out in just a half hour. It's right here. Federal Chairman Powell. I don't know if he's going to sneeze, hiccup, or burp, but whatever he does, the markets analyze the heck out of it and they react. So something will happen today, most likely good or bad in both stocks. So if you see the stock market really take off, it's probably not good news for the bond markets. So that's that for there. Some news in the markets right now. You see some housing shortages. I'm on CNBC's just real estate headlines. See some housing shortages here. But one thing I want to post to you is there are what we're missing out right now. I never realized this, but multifamily homes usually makes up about 11% of the market. Right now it's at 3%. So they are way behind the curve. And that's what they're saying, maybe we should start building more concentrated homes to help this housing market. So other than that, this is the only news out today. We are monitoring the stock market, but I am going to truly monitor at noon today. Federal Chairman Powell, I'll go live to let you guys know what he's saying and what the immediate reactions are. But we do have a special guest later this afternoon at 3 o'clock Central Standard Time. It's Jeb Smith. Like I said, he's a fantastic YouTuber and realtor out in Southern California. He's going to give us his insight on the markets out on the West Coast and just his general thought on the housing market. So thanks for watching, guys. Appreciate it. If you want to find out more about me and my team, go to therateupdate.com. We'd love to help you out. Take care. Talk to you soon. Bye-bye.